The E-mini has been in a bull channel for now today's the 8th day, and most of the bars have been trading range days. They've had at least one leg up and one leg down. The bars are also small. And I talked about how I think this price is the most important price on the chart, 25.59.5, because it's a measured move up from a major low, and this is a major high, and it was made more major by this sell-off, testing just a couple of ticks below it, and then reversing up, and then accelerating up. So this is a very important price. This is obviously a very important price, and that makes a measured move projection from those two prices a very important price. And we got to within a couple points of it yesterday. It's close enough on the daily chart for traders to believe the test is complete, but right now I still think it's more likely than not that we will reach it. Now, this is a type of wedge. It doesn't look like a wedge, but I think of it as a wedge. It's in a tight channel, and the channel is getting tighter, and we've had 3 or 4 pushes up depending on how you count it. And you have a small wedge after a buy climax, and that, even though normally would be a minor reversal, a small wedge like this, a small wedge after an extreme buy climax, and then you add to the buy climax, the climaxes on the weekly and monthly charts, it increases the chances that we'll get a test down. The breakout point right now is here. You can see this is a breakout, and you say, well, it's a breakout of what? Well, you look to the left, and it's a breakout of this high. It's also a bull breakout above the top of the bull channel. So we should get down to the breakout point, certainly at least to the bottom, to the top of the channel at some point within the next few weeks. And because the monthly chart is so overbought, we may correct for even 2 or 3 months instead of just 1 month. And 2 to 3 months, this is 2 or 3 months here. It's about 2 months. But no reversal yet. And until there's a reversal, the odds still favor higher. We're simply at a critical price, and the weekly and monthly buy climaxes are historical. They're as extreme as the E-mini has ever done in its history. So not likely to continue much further. Yesterday's trading, like most of the 7 days, now 8 days, was quiet. Initially we had a sell-off, but alternating bear bar bull, bear, and then big tail, and made it likely to be a bear leg in what would end up as a trading range day. We reversed up, and as I said, we have that, I think, very important target a little bit above. I don't think I have it shown on this chart. I'm going to put it on this chart just because just because it's so important, and I think we'll get there. Okay, here we are 4 minutes into the bar, and it's still small. In the middle of yesterday's range, at the moving average, all 3 moving averages are fairly close together, and therefore this is starting like each of the past 8 days has begun, or the past 7 days have begun, a quiet open. And it increases the chances that today will be like the prior 7 days and be a day that's mostly sideways. One of the days coming up soon will probably be a big bear trend day, because the weekly and monthly charts are so overbought, the odds favor a correction coming up soon, and it will probably begin with 1 or 2 big bear days. So one of these days is probably going to be a big bear trend day. By big, 30 points, 40 point range. All right, so we have a doji in the middle of yesterday's range, and yesterday was a trading range day. And this is telling us that traders expect today to be like the prior 7 days and mostly a trading range day. But as I said, there's an increased risk of a big trend day, a big bear trend day coming up at any point. Since when you look at the charts, a big bull trend day does not appear likely because the market is so overbought. Whenever you look at a chart and say, nah, that can't happen, that means it's more likely to happen than what you think. So there is also an increased risk of a big bull trend day. But if we do get a big bull trend day, it probably will result in either a 2-day reversal or it'll fail and have a big tail on top, reverse down and have a big tail on top. Here's an example, overbought market wedge, and we broke strongly to the upside and we got a 2-day reversal. So it's the same as a 1-day reversal. This is a 1-day reversal, big tail on top. Sometimes it's spread over 2 days. We've had at least 3 days in the past couple of weeks with strong early sell-offs. So the bears have been able to control the market for a couple of hours at a time. But the sell-offs all have had problems. They were all more likely to be bear legs in trading ranges than the beginning of a bear trend. The bears need to get consecutive big trend bars and not wedges and sell-offs with bad follow-through and reversals up at support like the 60-minute moving average. And they have not done that so far. You can see, we've had a lot of sell-offs, but they've all found support at the 60-minute moving average. I mentioned several times that we have a very strong rally, 60-minute chart, and a pullback to the moving average, and then we've rallied up from there, but the rally looks terrible. A lot of dojis, a lot of sideways trading, a lot of bear bars. It looks more like a bear leg in a trading range, and trading ranges have, a bull leg in a trading range. A trading range has a leg up and a leg down. I think the odds are, probably 70 or 80% that we're coming down here at some point in the next couple of weeks to have a bear leg in the developing trading range. And the bulls will try to get a double bottom, and the bears will try to get a head and shoulders top, left shoulder, head, and then a few weeks from now, a right shoulder. So this entire rally over the past 8 days is probably a bull leg in a trading range. So, I think we're going to come down to this low some point in the next couple of weeks at a minimum. Yesterday ended always in long, but here we are 8 minutes into the day, and the range is only 6 ticks. So that is warning us that today is probably going to be another quiet day, that the bulls and the bears are not yet in the mood to move the price. They're satisfied with the current price. Can you sell above 1? I would not. Even the bulls who bought below 1, here we are, 4 minutes into the bar, and they have not made 1 point yet. So this could be a trading range open sideways for an hour or two, and then the market decides on the direction of the first swing. Always in long, right? So bulls can buy above 2. All right, I'm doing a test. Test number 2. Test number 3.
Yeah, I'm hearing you.
Sorry about that. Go to webinar, booted me out. What I was saying is this is a possible low of the day, but we're in the top of a trading range, and I think a lot of traders are not going to be eager to buy with stop orders unless we get a double bottom here, even though we have a magnet above. As far as selling above 2, I would not sell above 2, right? So you're either long or flat. Best choice, probably flat. It's still 7, 6, 6, 12 range, 12 minutes into the day, and in the middle of yesterday's range. Best choice, flat, right? For the bears, a micro double top, and this is a lower high, and for the bulls, this is a pullback in a bull trend. But sideways now for 4 bars in a 7 tick range in the middle of yesterday's trading range at the moving average. So it looks like a limit order open, or at least a trading range open, and the market is happy, satisfied at the current price. There's no sense that the price is wrong and that the market has to move quickly to a better price. That most traders just wait. What do you do if you bought above 2? Well, your stop is below 2, but I don't. It's a limit order market, and it's not a very good buy, and it's not a very good sell below 3. So here we have 2, a good-looking bull bar, pulling back to the 5 and 15-minute moving averages. Yet a terrible entry bar and terrible follow-through. You can look at the 15-minute Globex chart overnight. It goes up for a bar and then sideways, and then it's just repeatedly reversing. No consecutive big trend bars up or down, and so far this is a continuation of that. Traders either need the market to go sideways and form a double bottom or a double top, or they need a strong breakout up or down, consecutive big trend bars, before they believe that the market is likely to begin a swing. A micro double bottom, but 4 bar extremely tight range. Best choice, wait. Bears have a micro double top, 1-3. Bulls have a micro double bottom, 2-4. But I think the math is bad to do anything right here. This afternoon at 1:30, I'm doing a Futures I/O webinar. And because of that, I'll probably stop talking around 12 or 12:30 because I'll need to rest my voice. So I'll probably do the summary today maybe at noon. All right, I decided that at noon today I'll do my end of the day summary, and I will not take questions today. So if you have questions, please post them in the blog site, the end of the day section. The webinar starts at 1:30, and at 1 o'clock I have to connect with Futures I/O, and we have to do some testing to make sure everything is working properly. Bull's hoping to get a series of bull bars. I think it is always in long. The bears did not do enough to take control. We were always in long since down here yesterday. And I always assume that the trend continues until it clearly does not. But however, is it strongly bullish? Obviously not. I still think the best choice is flat. Bulls are trying to get 2, 3, 4 bull bars and then a move up to that target above. Here's the target on the daily chart. New high of the day. typically when you have a trading range day, and so far this looks like a trading range day, by the time you're finally convinced that the market is going one way, it goes the other way. So up here, reverse down, bear breakout, reversed up, bull breakout, reversed down, bear breakout, reversed up. Makes it difficult to buy because it's natural to want to buy strength, betting on more strength, but in trading range days, so often the strength reverses. Two consecutive bull bars, only one bear bar in the first 7 bars, and it's a continuation of yesterday's always in long. The bears want a double top 81. They want this to be a buy vacuum test of yesterday's close, and the bulls want it to be a resumption of yesterday's bull trend, and they want it to get up to that target above on the daily chart. What happens when it gets there? I think it'll probably fail. So I think we'll probably get a reversal. And we're right around it now, so we're close enough up to reverse down now. But, right now, until we reverse down, I think it's still more likely that we'll get there. Small wedge, reverse down on 1, reverse down on 3, but only one bear bar today. Slightly more likely buyers below 8. The stop order bulls from above the 5 high 2 so far have a 5-tick failure. For the bulls, we have a gap down, and we tried to reverse up from the moving average, and we got a second entry reversal up above 5. For the bears, a wedge lower high, but I think a lot of traders will not sell below 8, no matter what it looks like. We've only had one bear bar in the first 7 bars. I know everyone is eager to trade, but the goal has to be to make money. And I think it's too difficult to structure a trade right now to achieve that goal. So I think it's better to wait. We're always in long, but here we are 45 minutes into the day, and the range is only 9 ticks, and stop order bulls have not made 1 point. So something's wrong. Better to wait. By the close of bar 7, there's a 50% chance the day has seen either the high or low. And it usually does not look like it. Sometimes it's very clear, but, a lot of times it does not look like it. The percentage might be a little bit less when the range is small like this, but it's just something to keep in mind that 50% chance we may have seen either the high of the day or the low of the day. We're always in long, so it's slightly more likely that we've seen the low of the day, but this could also be the high of the day. Very difficult for the bulls to hold long. 5-tick trap, small wedge. Watch if we sell off today, especially if it's a huge bear trend day, not likely, but if it is, we'll look back and say, oh yeah, 7 was obviously the high of the day, a wedge test of yesterday's close. And things, when the high or low is forming, very often it does not look very convincing. I still think best choice is flat, But, if you're a bull who bought above 2 or above 5, what are you going to do here, right? I think it's difficult to hold long. And for a limit order bull, they don't want to be buying at the 9 low because it's too high up in a trading range open. And for the bears, not a good sell signal bar 8, and a worse sell signal bar 9 despite the II. Best choice, just patiently wait for higher probability setups. Getting near the end of the first hour, and so far it's a doji bar in the middle of the last hour, and we've had a lot of doji bars. As I said, when you look at this rally, do you think it looks like this? Does it look like a strong bull trend, or does it look more like a trading range? If you just look at what's on the screen, it looks like it's probably a bull leg in a developing trading range. And it probably is. I still think we have to test down here, probably within the next few days, whether or not we get up to my target, that measured move projection up here. Bulls hoping that this is similar to 54 yesterday, a pullback in a bull trend. And the bears are hoping to get consecutive good bear bars breaking below 2, and they're hoping that it leads to a swing down. They want the 60-minute bar to close near its low and be a bear inside bar closing on its low. We have a rally, a reversal, a rally, and then they're hoping for a 2-bar reversal here. Still a minute left. So bulls are hoping this is a pullback from this breakout, and the bears are hoping that this is a reversal. And as I said, the bears are trying to get the 60-minute bar to close on its low, which is the bar 2 low. 2 bear bars, and you can see the open of 12 is below the close of 11. And that tells you that as soon as traders saw a bear body on 11, they sold. And some of those traders are bulls finally giving up. Others are bears taking a chance that we've seen the high of the day, we're going to have a swing down. To me, I'm still neutral. It's still always in the long. But if we get one more bear bar, especially a close below 3, then we're probably always in short. Unless the bar is big, the odds are we're still in a trading range open. Bulls buying down here. They're trying to prevent the 60-minute bar from closing below its open. It opened with bar 1. So they're trying to get the close of 12 to be above the open of 1 to put a bull body on the 60-minute bar. And the bears want the opposite. They want the bar to close on its low, and preferably at the low of the last hour, which is down here. So bears want bar 12 to close at or below this low to create a better sell setup on the 60-minute chart. Remember, this entire rally, I think, is a bull leg in a trading range, and that means it'll probably lead to a bear leg in the trading range. And it's going on for a lot of bars, about 30 bars or so. So probably before long, today or tomorrow, we'll start to get a bear leg in the range. This is a reminder that on the open, if you get a strong move up or down, 50% chance it'll reverse. Well, they're going to wait for the final second to let us know whether it closes on its low or does not. Even if it does, unless 12 is a pretty big bear bar, a lot of traders will not sell down here, especially right above the 60-minute moving average. The market's deciding, has the first swing of the day begun, or are we still in a trading range? And that is not what the bears wanted. So, are we always in short yet? I don't know. I am back to neutral. I think 50-50 chance. As I said, 50-50 chance we've seen the high of the day, 50-50 chance we've seen the low. "60-minute chart looks like we should turn down soon, but we do not have a convincing sell signal yet. Daily chart looks like we should go up a little bit higher before we turn down, but we're close enough. This might be as close as the bulls get to their target. For the bulls, a double bottom, but a doji after 2 bear bars, so a lot of bulls will not buy above 12. They'll wait to see if we get a micro double bottom. And for the bears, they were hoping to get a big bear bar on 11 or 12, and they did not. So there's still not a lot of agreement about the direction. Bears getting their breakout. The 60-minute moving average has been support for about a week. As you know, I think we're going down, but to say that this is going to be the break below the 60-minute moving average that will start the swing down, it's too early to tell. Why are we not getting consecutive big bear bars closing on their lows? So it's not looking like a bear trend yet. For the bulls, another test of the 60-minute moving average, but with a 7-bar bear microchannel, a lot of bulls will wait for a second entry buy. And for the bears, not a lot of them are going to be selling down here because there's not enough momentum down and we're just above the 60-minute moving average. Buyers or sellers above 13, we're probably always in short. So probably sellers above, but I still think best choice is wait. If there was more momentum down, I probably would sell the close, but I don't like to sell low unless there's good momentum down, because I need to believe the market's going lower. And while this is okay for the bears, it's really not enough to make me think we'll break below the 60-minute moving average. From a breakout mode situation, after the first bar, we went below it and then up. We went above it and then down. But when I think of breakout mode, I like the pattern to be, 10 bars or more. And therefore, I don't consider this a reliable breakout mode pattern. If we go above 13 or 14, then we would have a bigger breakout mode pattern and it would have more than 10 bars. That would have a higher probability of leading to a measured move. So let's say we trade above 13, then after the first bar we have a reversal down and a reversal up, and the pattern has 10 or more bars. The range would be about half of a day's range. So if we go above 13 or above 14, that would be a higher probability breakout mode pattern, with bulls more willing to buy above 7 and more willing to sell below the low of the day. However, I have to say, this lack of momentum, I think if it does go above 13 or 14, rather than selling on a stop below 13 or 14, I would wait to see if we break strongly to the downside before selling. It's still a trading range, and there's just not much momentum. The sell-off 10, weak follow through 11, 12, sell-off 13, and then a doji bar, testing the 60-minute moving average. What happens if we get a very big bear bar here? You still have the problem of when you look to the left, we're in a trading range, and the beginning of the sell-off was not very good. The sell setup itself, 8, 9, not very good. So that increases the chances that this will be like that. Trying to accelerate below the 60-minute moving average. Here's that channel on the 60-minute chart. Probably a bull leg in a trading range. And the market again is trying to begin the bear leg. It's tried several times already. Each time it has failed. Bulls trying to make 15 like 11 yesterday. A breakout, but a big tail. But the bulls will need more than just that, right? After this many bars down, they'll probably need a micro double bottom, which means there probably still are sellers above 15. Testing, we have a spike pullback channel, testing the beginning of the channel and testing the 60-minute moving average. The 60-minute moving average, fairly prominent tail, but we're selling off relentlessly, not strongly, but relentlessly. Every bar has a lower high, but there's hesitation on the way down, and it's right now I'm trapped out. I like to sell closes in a trend, but you know, when the follow through is bad like this, too much risk that the trend is a bear leg in what will become a trading range. And then I find myself selling at the low, which I don't want to do. And to buy, I'll need at least a micro double bottom. You can argue parabolic wedge, down 10, 11, pause, down 13, pause, and then down 15. But I would rather get at least a micro double bottom before buying. Because it's a weak sell-off, will bulls buy, use a wide stop and scale in? Yeah, I would not yet. Bears, however, when it's a weak sell-off, instead of selling low, they'd rather sell a rally, maybe a couple legs sideways to up to the moving average, maybe a test to the top of this 15 sell climax. You know, if you're a bear, you see the bad follow through. You might not think of it as a parabolic wedge, but it is a parabolic wedge. And we're at support, 60-minute moving average. In any case, you see the sell-off is not strong. When that's the case, bears prefer to sell pullbacks, rallies, than to sell closes. The sell-off continues to have problems. You know, it just doesn't look all that good. Now, what about sell the close bears 15? Was it reasonable to sell 15? It's probably reasonable, but I would not do it. And now we have about a 10-bar bear micro channel. So the first reversal up will probably be minor. It's possible that it's the low of the day, but more likely the bulls will need at least a small double bottom. They always in bears, it's reasonable to get out above 16 and look to sell higher. Some of the sell that close bears 15 will look to sell more 1 or 2 points higher. They're disappointed by 16. You think a lot of bears are looking to sell right here? No, probably a lot of the bears who sold the 15 close are now trying to buy back their shorts break even after seeing 16. So a lot of traders will not sell down here. They want to sell higher or they'll wait for it to go sideways for a few bars and create a low too short, and then they'll sell. Always in bears, I think, get out above 16 if they have not already gotten out. And the bulls, even the bulls who bought the 15 close have not yet made money. So I still think it's a little early to buy. However, the sell-off looks bad. So it's probably a bear leg, and what will end up as a trading range. Yesterday we had a bear leg in a trading range. The bulls got a minor reversal, and then we got a new low. Whatever reversal we get here probably will be minor. It could last 2 or 3 bars, could last 5 or 10 bars, but it probably will have a test back down. It might form a higher low, might form a lower low, might form a perfect double bottom. But the first reversal up is unlikely to go all the way up to the high. You had buy the low bulls bar 2, just like yesterday, they had buy the low bulls bar 1. Eventually they made money. And because the sell-off is weak, probably the bulls who bought the 2 low and 1 point lower will make money. For the bears, the follow-through is just terrible. Doji on 12, 14, bull bar 16. And that makes a lot of bears unwilling to sell. And if it keeps going down like this, I'm not going to sell it. I want to sell a pullback, sell a rally. So they close bears, get out above a decent bull bar, so I think they get out here. And they'll look to sell again below a bear bar, but with a bull bar that looks like that and a parabolic wedge, a lot of the bears will not sell below the first bear bar. They'll wait for a second bear bar, like yesterday. Very tight bear channel, good buy signal bar. The always in bears get out, and they have to sell again below a bear bar, 17, but the reversal up and the possible wedge bottom, a lot of the bears wait for a second sell signal bar, 21, but it's after 2 bull bars, so a lot of the bears would not sell there either. And not all that easy to sell below 26. When you get a setup like this, sometimes you get a third push down to a wedge bottom. So 1, 2, and then 3 somewhere over here. We've had several of them lately. Yesterday was an example of a sell-off and then a big wedge bottom, 1, 2, 3. There was a wedge bottom here late in the day. Here, 1, 2, 3. Does not look like a wedge, but a lot of computers see it as a wedge. Early sell-off, wedge bottom. Same here. Reversal, reversal, reversal. So early sell-off, wedge bottom. Are we still always in short? Yeah, I think the bulls need to do more. Anyone going to sell below 17? A low one short. Like I said, I think the bears will want a second entry short. So a lot of the bears will not sell below 17 or 18. A lot of the bears now, they sell the 15 close. They're trying to sell more, 1 point higher, 2 points higher. And they're trying to get out, break even around the 15 close. And that means there are bears trying to buy at the 15 close. And probably not a lot of bears willing to sell below 17. Bears probably want to buy at the 15 close. Consecutive bull bars closing on or near their highs. Bulls might buy below 17. The one problem with the bull case, besides the tight channel, is that the whole thing is small, and therefore it's hard even to make 1 point. bulls, I think, should wait for a second entry buy, and bears should wait for a second entry sell. Fifty percent pullback is here. Limit order bulls, like yesterday, we had the limit order bulls who bought the one low, bidding against a big breakout, and it got exactly up to that one low, and a lot of those bulls get out below this bear bar, although ultimately it did get back above that low. And this is similar. The two low, we're exactly at that low. You have limit order bulls who bought that low. They bought more 1 point lower, and the bulls are trying to sell at the two low, and the bears are trying to buy at the 15 close. Trading range behavior. The bears looking to buy low and the bulls looking to sell high. Three consecutive bull bars. Are we always in long yet? I don't think so. But the bears, if they did not get out above 16, some of them are trying to scale in 1 point higher from the 15 close. But it's a problem. You can see the sell-off has terrible follow-through. The bulls are hoping this is another rally up from the 60-minute moving average. So for them, it's an opening reversal up from the 60-minute moving average. But too many bear bars. We have a 10-bar bear microchannel, and therefore the first reversal up probably will be minor. The bears want a second entry sell. They don't even have a first one yet. And the bulls want a second entry buy. So some kind of a double bottom. Bar 18. By the close of bar 18, 90% chance we've seen the high of the day or the low of the day. When the range is small like this, it's only a 4 point tall day. I think the probability is less because the high of the day is not all that far away. If the bulls do get a small double bottom here, that would be a higher probability buy. A second entry buy at the bottom of a probable trading range day. Four bull bars closing above their midpoints. Probably always in long, but just like selling down here is not great, buying up here is not great. Trading range days, by the time you're convinced that there's a trend, you have to assume the trend is about ready to reverse, bar 13, 14, 15, right? And then for the bulls, bar 6 and 7, it's looking bullish, oops, it reverses. And then it's looking bearish, oops, it reverses. What about the minor reversal? I still think it's probably a minor reversal, and that we'll have to test down. Now, what about the breakout mode? After the first bar, we reversed down, and now we're reversing up. What happens if we break above 7? Well, if we break above 7, right now it looks like we will. If we break above 7, probably 90% certain that 16 will remain the low of the day. And so if we break above 7, then today would probably either be a trading range day or a bull trend day. Can you buy on a stop? One tick above 7? I would not. I would wait to see if it starts to accelerate strongly upward and then buy the strong breakout, or look to buy a pullback. And the limit order, bears who sold the 15 close, well, they gave up on 19. That's why 19 looks that way. Remember I said that the sell to close bears should get out one tick above 16, and some did, but most of the remaining ones gave up on 19 after 3 consecutive bull bars. What about buy the closed bears? What buy the closed bulls? 7. Are they going to exit up here? I don't think they have to. They might reduce their position, but if they bought the 7 close and bought more above 18, right now they're feeling good about the size of this reversal. So they might sell out of part of their long up here, but I think it's probably okay to be holding on to part of their long as well. Sell the closed bears 15, I think, gave up. And so I think we're always in long. And right now, we've probably seen the low of the day. You know, what's the chance? Probably 60 or 70% chance we've seen the low of the day. And the percentage will go up if we get above the 7 high of the day. Markets deciding, is this going to be a bull trend or a bull leg in a trading range? Bears want the double top, but we have consecutive decent bull bars, not huge, but decent, and therefore probably buyers below 21. Right now, we're after the 18th bar, so 90% chance we've seen either the high or low of the day. The reversal up is strong enough so that it's more likely that we've seen the low of the day and that we'll break above 7. A lot of trading range trading, so the odds are still against a strong bull trend day. However, the odds are that today will either be a bull trend day or a trading range day, not a bear trend day. Always in long, so probably buyers below. Bears want the double top, but they should not have allowed 1920, especially after the reversal up from the 60-minute moving average. Stop for the bulls all the way down here. Trading range day, so a lot of bulls are hesitant to sell high, just like a lot of the bears were hesitant to sell low. But probably always in long. You know, the bears want the double top with 7, the reversal down, break below the neckline 16, measured move down. But because 1920 are strong enough, and these 3 bars are good bars as well as support, more likely buyers below 21. However, any bull buying stop all the way down here, so they have to trade small. What about the sell the closed bears 15? Are they still short? You know, I don't think they should be, but they might be. Sometimes you just get very abrupt big reversals all day long, like this. You know, up and down and up and down, up and down, and the day becomes a trading range day. This is rare, but it happens. The next tick is important because if we get it, then, you know, close, maybe a 90% chance it will not fall below the 16 low for the rest of the day, or at least for the next several hours. And therefore, any sell-off, even if it's sharp, will be a higher low, like this. Sharp sell-off, but did not get below the low of the day. Markets deciding, I think, between a weak bull trend day and a trading range day. If it's a trading range day, we can get a very deep pullback all the way down to near the 16 low. So any bull buying up here, buying closes, buying below bars, they have to trade small and put a stop down here. And the bears are trying to keep it from breaking above 9 because they know if it does break to a new high of the day, the odds are high that it will not get down to the low of the day. Right now, the bears have a chance of it getting down here. Maybe a 30% chance. But if it gets one tick above the 8 high, instead of 30% chance, they may only have a 10% chance. What do the bulls do? For the bears, it's a double top. I said down here that the bears would get out above 16. I think that is less clear here. I still think we're always in long, and it's more likely there are buyers below. So I think one tick bear body 23, strong reversal 1920. A lot of the bulls will stay long, and traders will look to buy a pullback. And the pullback could be deep, all the way down to the 60-minute moving average again. So anyone who is long has to be using a wide stop. We had a couple of small bars here earlier, and it led to a big sell-off. Now we have 4 small bars. We have a little II again, just like this, a bull bar just like we had here. But I think the context is different. The reversal up is stronger, and I think we're always in long. The market is, I think, probably deciding between a trading range day and a weak bull trend day. And therefore, I would not take the sell. Probably buyers below. But like I said, it's still breakout mode, and we still don't have the breakout, so we could get a very deep pullback. And even if we do get the bull breakout, the odds are against a big bull trend day. Here's 50%, which is testing the high of the buy signal bars. When do the bears start to sell? I would not sell unless we break below 16, or if we go sideways here and form a small double top here, then a triangle top, 1, 2, 3. Probably buyers 24 low, 1 point lower, 2 points lower, and bulls give up below 16. And for the bears, I think a lot of the bears will want a micro double top. This looks like it could be one of these days where you just get a strong reversal down, strong reversal back up, and just multiple reversals. I think it's fascinating that it got exactly to the 7 high breakout mode, and the bulls were unable to get the breakout. Does this 1 bar make it always in short? Obviously, if it closes below 16, it does. A lot of double tops do not look like they'll work, but they go ahead and they work. Most likely sideways. I was just looking at time and sales. There was a 500 contract trade and then a 400 contract trade at 54. And you don't know in advance if it was initiated by buyers or sellers. If the market goes up, it makes you think that it was probably initiated by buyers. If instead the market went down, it was probably initiated by sellers. For the bulls, this is a pullback from this breakout, and it's a double bottom with the buy climax low. But it's enough of a sell-off so that a lot of the bulls are not going to be buying the 26 high. They'll wait for some kind of a micro double bottom. I placed a limit order to buy 1 point down and got filled right here. And I had a limit order buy more 1 point lower, did not get filled. And I just got out break even on my first entry. So I'm back to flat. Right back in the middle of the trading range. The bulls want this to be a breakout and a pullback from the breakout. The bears want it to be a reversal down from a double top. I am neutral. I was bullish, but this is big enough down to put me back to neutral. So I am flat, or right in the middle of the range. The bulls want a head and shoulders bottom, bull flag, left shoulder head, right shoulder. If you want, you can say bull flag here, bull breakout, and a pullback. And the bears want the double top. The bears have terrible follow through after their sell-off 26. I think we're still always in long, slightly more likely we've seen the low of the day than the high of the day. And the bears want a double top, a break below 16 low, and then a measured move down. The market is deciding whether it's going to get to this measured move target on the daily chart, or if the wedge is the end of the move. Have we completed the wedge and have we started the correction? I don't think we're going to go much higher. We might, but I think it's unlikely because the weekly and monthly charts are historically overbought. The market has never done this in its history, and therefore it's unlikely to become more extremely overbought. There's still a potential for a surprisingly huge trend day, right? And if there is a big trend day, I think down is more likely than up because of how extremely overbought the weekly and monthly charts are, and how we have a buy climax and a small wedge. I showed the weekly chart yesterday having a similar pattern, breakout and a small wedge. The market came all the way back down to the breakout point. So that is the daily chart. Breakout, small wedge. And this is the weekly chart. Breakout, small wedge, breakout, small wedge. And when this pattern occurred on the weekly chart, we got a very strong sell-off, and the market was sideways to down for the next 20 bars, the next 30 or 40 bars. So the next 30 or 40 days on the daily chart. It began with a big sell-off, and that's why I'm saying that one of these days I think is probably going to be a big bear trend day, comparable to this bar on the weekly chart. I'm going to put the weekly chart back to today. Last week, small week, so increased chance of an outside down week, trading below last week's low. Even though the probability of this is not high yet, if we start to sell off, that is what I'll be looking for. We went above last week's high yesterday, and if we start to sell off to below last week's low, that would increase the probability that we've begun a correction that would last 1 to 3 months. For the bulls, still more likely a bull flag than the start of a bear trend. Buy zone, the bottom half of a trading range day. The bulls who did buy 2 points below 24 just got filled. What I bought, if I wasn't pointing out the weekly chart, I may have bought that 26 low. Trading range day, small range, probably will stay a trading range day. It's still early enough in the day so that we could get a big trend day up or down. If we do get a big trend day, I think down, it will be more likely than up. But most likely, it's going to remain a quiet day all day. Second entry buy for the bulls, but I think not a strong buy with stops. Better to be buying with limit orders below bars. Will the bears sell above 29, betting that this is the start of a spike pullback channel? I would not. They got bad follow through 26, and the bulls bought the 26 low. Plus, I think we're still always in long. I think it's more likely that we've seen the low of the day than it is that we've seen the high of the day, even though we have not yet broken out of the 18-bar range. Small 18-bar range became a big bear trend day. Small range for several hours, and then we get a big sell-off. I'm just showing this to make the point that having a small range does not guarantee that the day stays small. Sometimes you get a surprisingly big breakout. small range. Well, this is not a big bear trend day. This is a small pullback bear trend day. Now, I'm trying to find a particular type of day, a day where the day is small, and then we get a huge bear breakout, and so far I have not found it. I probably have one saved up, and I'm just trying to figure out where I would put it. I have different sections in the example folder, like sell by close, stairs up, and then stairs down. And I'm trying to think of where I would have put that small trading range and then huge bear day. No, cannot find it. Limit order bulls who did buy 26 are disappointed by how much time it's taking. So if they sell out of their longs, we could get down below the low of the day. You can see they bought the 26 low, and it keeps hitting their entry price, and they keep buying more to prevent it from going down. They want it to turn up. Right now, I think the best choice is flat. It's slightly more bullish than bearish. The bears did not get follow through after 25, but we're probably in a trading range day. Like this kind of a thing. Here's another example, same thing. Here's another one. The bears who sold the 25 close did not make money. The bulls who bought the 25 close got filled one tick above, and they needed it to rally 5 ticks from there to make money, and it only rallied 4 ticks on 27. So they have not yet made money. The bulls who bought the 26 low got filled here, and they need one more tick. I think we're always in long, but with the big reversals today, it's probably better to be entering with limit orders and not stop orders. This is a higher low after a bull breakout, a second entry buy, but a lot of dojis, not good stop order trading. The bears have a double top lower high here, and they have a double top bear flag here, but I think it's still slightly more bullish than bearish. And it's a limit order market, so selling with a stop below 29 is a low probability bet. When the market is in an extremely tight range like this, a 5-tick range, I think it's better to be flat. The bears, if they're short, stop is up here. Bulls, if they're long, stop is down here. And you can see we're right in between the two prices. So the risk for the bears is equal to the risk for the bulls. The minimum reward for the bulls is equal to the minimum reward for the bears. So risk reward for bulls and bears equal, and probability just about equal as well. And that means it's very difficult to structure a trade. You can always buy and hold for reward twice your risk, or sell and hold for reward twice your risk, but I think it's better to be flat. You have a failed breakout above a double top, a 50% pullback, and a bear bar closing on its low, but a really quiet small day. So certainly an okay swing. The risk is not big. You sell right here below 39, stop one tick above. So you're risking 4 ticks trying to make, 2, 3, 4 points. But usually when the range is this small, not even 2 points, I usually don't take these trades. I just wait. Now the range today is 4 points. So I would say 95% chance the range is going to get bigger. So 95% chance either we're going to fall below the 16 low or go above the high of the day. Usually when you have these small days, the range gets bigger, but not much bigger. Sometimes 2 points, sometimes 3 points. Rarely will they lead to a big trend day. Small day, less than 5 points by the end of the third hour, and it stayed small all day. This is a 3.5 point range up to this point, and the bull's going to measure move up. 4 point range until almost noon, and then a little bit bigger. Less than 5 points for 4 hours, a little bit bigger on the downside, and then reverse back up. The range ended up 7 points. Very small range for most of the day, and then a little bit bigger at the end of the day. This is the exception. Small range for first 3 hours, and then it became a huge bear day after that 22 point range. Anyway, this is an example of what I was talking about earlier, that you can have a very small range and you can end up having a huge trend day out of it. I'm going to think about where else to put this. That looks like bar 18. And then we get a breakout of the 18 bar range. And a very big bear trend day. Unusual, but it happens. Usually when you have a small day, the day stays small. Usually it gets bigger, but not much bigger. Small day that stayed small all day. This day remained 4.75 points all day. Got a measured move up there. Barely got to a new high. The later in the day the breakout comes, the smaller the breakout. I should put that down. This is an interesting point. Look at a very small day and look at the next day. It was very, very, very big. Again, when the breakout comes late in the day, usually not very far, late in the day. Earlier in the day, you have a chance of a big breakout. right now we're more than 3 hours into the day, and are we always in short? I don't know. I guess I think we're probably always in short. You know, we have a wedge lower high, but this is a 7-tick tight range for 15 bars, so not a great sell. But anyway, my point remains, you know, we're late enough in the day so that if we do get a breakout at this point, it's probably not going to be huge. You know, here, well, this breakout was at 10 o'clock, and we got a measured move up. This breakout was much earlier. In the euro today, I missed a trade. I was looking to buy for a scalp down around here, and I was talking, and by the time I noticed this, I thought it was too far up for me to buy for a 10-pip scalp, so I ended up not getting that buy. This is the reason why I was looking to buy. We're collapsing at the bottom of a channel and trying to reverse up, and also a small wedge here. I'm going to close that out for a minute. Everything is tiny for the bulls, a breakout and a small wedge bull flag. 1, 2, 3. Will the bears who sold below 39 exit above 45? First of all, I would not have taken the short. If I did take the short, I probably would exit. Will the bulls buy? I don't know. Nobody's trading. You know, a lot of the bars are 2 ticks tall, and you know, a lot of the volume, you know, 2,000, 3,000 contracts. Here, 1,500 contracts. So not a lot of energy, not a lot of traders willing to trade. A new low, small expanding triangle, 1, 2, 3. Bulls want the reversal up and the higher low, and the bears want the breakout, but they're not getting big bear bars. They have 3 bear bars here, and then another one here, a couple here, but a lot of dojis along the way. So it's still a limit order market. Yeah, would I buy the 29 low? I did not. I'm flat right now. We've had over 20 bars in a very tight range, and I usually stop trading and I wait for either a breakout or a decent buy at the bottom. We might get that here, but I probably will not take it, or a decent sell at the top. And I did not take that, although I was tempted. Bears trying to get their breakout. Now, what about selling on a stop? 1 tick below 16. And all of those examples I showed, all except one, when the traders got their breakout, they were able to get a scalp. There was one, see if I can find it. There was one where the breakout immediately reversed. Here we never got the breakout. Here we got a breakout and a pullback, but a little bit more up. It reversed, but we came back down a second time. Here the breakout 6 hours, it went up just a little bit. Here a breakout and a pullback. Here a breakout and never pulled back. So the math is probably okay to sell the breakout, but you may have to sit through a pullback. Normally, I say breakout mode, 50% chance the breakout reverses. Here, because the range is so small, I think it's less than a 50% chance that the breakout reverses. It's a higher probability that we'll get follow through either immediately or it'll break out and pull back and then try to break out again a second time. Are we always in short yet? We probably are at this point with this bar. The bulls tried to get a wedge bull flag here, and instead it resumed down from this wedge bear flag. Remember, just like at the high of the day, there was no breakout until there was a breakout, and we did not get the breakout, and we don't have the breakout at the low of the day either. And until there's a breakout, there's no breakout. You know, the market can repeatedly reverse. You see how the 50 open is above the 49 close. That tells you that as soon as the bar closed, bulls bought it. They thought it was more likely to reverse than to successfully break out. And that's common in trading range days. When there's a big bear bar near the low, bulls buy the close. And if there's a big bull bar near the high, bears sell the close. For the bulls, it's still 2 legs down in a trading range day. Trying to create a second entry buy, but the range is really small, and I probably am not going to buy the reversal up. If I were buying, I would have bought the 50 low or the 29 low, and I did not. We're getting late in the day. Do not have the breakout yet. I still think 90% chance we're going to get the breakout because the range is only 4 points. Since we're near the low of the day and it's late in the day, it's obviously more likely that we'll get the bear breakout. But again, even if we get it, it'll probably just be a point or two. Bulls, spike and channel down, trying to get a low of the day. But location's good, but way too many bear bars and the range is too small. So I think it's better to be flat. Who's going to sell below 55? You know, hoping for the breakout. Probably not many traders. Because even if they get the breakout, it may first be just 1 or 2 ticks and then we get a pullback. And for the bulls, we have an II-53, but 2 bear bars. Expanding triangle, higher low, but the 2 bear bars stalling below the moving average. Not enough of a reason to buy with the stop. Remember, I'm going to wrap up at noon today because I have to get ready for the webinar for Futures IO at 1:30. Even if we get the bear breakout, which right now is more likely than the bull breakout, I think it's difficult to hold short. It's still on that sell below 41. You know, maybe bears get out above 45. I don't know. If I took that short, I'd keep my stop up there. And do the bears get out above 54? I don't know. A lot of them probably scalped out for 1 point. But swing bears, they're still on a short, stop above 39, maybe above 47. However, you know, it's unlikely that we're going to go very far. Daily chart, I keep talking about the wedge after a buy climax. And it's real. And I think it's unlikely that we'll get a strong bull breakout from here. And I keep talking about the weekly and monthly charts being more overbought than they've ever been in the past. The monthly chart, once in the past 50 years, has the market had a 13-bar bull microchannel. We currently have a 12-bar bull microchannel, so it's unlikely that we're going to go up much more, if we go up at all, without pulling back for 1, 2, or 3 months. For the bears, a lower high, but 7-bar bull microchannel and really small range day. Most traders will not sell with a stop order, especially since we went 5 ticks above the moving average. If we keep failing at the moving average, they'll sell. But going this far above, I think, keeps the market pretty neutral. Still a 90% chance we're going to break above the high or below the low before the end of the day. I'm going to put a pink circle over every day that has a range of 4 points or less, like today. So today is a 4-point range, and in the past 3 years, there has not been a single day with a 4-point range. Every day obviously started with a 4-point range. Some days had 4-point ranges for the first 3 or 4 hours, but every one of those ended up with a range bigger than 4 points. That will probably happen again today. You can see there was a 4-point day back here 3 years ago, and then another one 4 or 5 years ago, and that's it. So 2 in the past 5 years. Is today going to be the third? Not likely. There have been many other small days, but every one of them became bigger by the end of the day. Therefore, it's still likely that today's either going to go to a new low or to a new high. Even though it doesn't look like it, sometimes it happens right at the end of the day. You know, I gave examples of that small day. No breakout here. It stayed 4.75 points tall, which is still bigger than today. And here we got a breakout around 11:30, a little bit of a breakout, a little bit of a rally. Here we got 2 breakouts, 10:30 and then again 12:30 or so, but did not get very far. Here a breakout after 12, so around 12:30, the bulls got a breakout, small pullback bull trend, so more likely bull breakout than bear breakout at this point, especially since there's so little time left in the day. And here are breakouts that occurred earlier in the day. You have a better chance of a measured move up or down. Just trying to construct the measured move projection. You can see the bulls got a measured move target right at the end of the day, but here the breakout started early, 10:05. More time left to go far. When the breakout starts early like today, less time to go far beyond the range. Bar 60, the end of the 5th hour, again holding above the 60-minute moving average. Now the bulls have a decent buy signal bar on the 60-minute chart, but 30 bar, 28 bar, very tight range, lots of decent sell signal bars, decent buy signal bars, but a tight range trumps everything. So I would not buy on a stop above this hour's high, because probably the reversal up from the moving average will not get very far. You can see we're right at the bottom of the channel. This is not violently rallying from the trend line. Bull's trying to get the gap, possible measured move up. We're getting late in the day. Let me see where that measured move takes us. Very close to the all-time high. Trading range today, anytime you're convinced it's going down, it's about to reverse up. Anytime you're convinced it's going up, it's about to reverse down. And that's why it's hard to sell low here, or buy high up here, here, or here. Tight bullish channel. I think, again, we're running out of time, right? And that means if we start going near the low of the day at the end of the day, we're probably going to get the bear breakout. Now we're going near the high of the day late in the day, so it's probable that we're going to get the bull breakout. You can see all of these reversals, or all the breakouts. If it's starting to go to the top, you get the bull breakout. Here it's near the low, we got a bear breakout. Working toward the top, we got the bull breakout. Working toward the top, we got the bull breakout. This is an early breakout, but we got the bear breakout. So, right now it's more likely that we'll get the bull breakout than the bear breakout, because we're running out of time to get all the way down here and get the bear breakout. The math is very difficult. The bears probably need a second entry short. They have a parabolic wedge, 1, 2, and 3, but they probably need a second entry short. Again, we're running out of time, and the odds still are that we're going to get at least a small breakout up or down. I was just looking at time and sales, and a 400 lot trade just took place at 55 and a quarter, and then a 500 contract trade took place at the same price. Again, you don't know if it's heavy selling that's going to lead to a reversal down, or heavy buying that's going to lead to an upside breakout. Because of the time of day and the tight bull channel, it's more likely that we'll break to a new high than it is that we'll reverse to a new low, because a lot of the bears will want a micro double top, so they'll want the market to go sideways for a few bars, but still not much money to be made, even if we get the bull breakout or the bear breakout. I have to start getting ready for the 1:30 webinar. I have to rest my voice so that I'm able to speak for the webinar. No questions today. Not all that much to say. To me, it still looks like we're above the bottom of this rally, and we have a deep pullback. You can call it a triangle, 3 pushes down, 1, 2, 3, but we're still probably always in long from this. We have a fairly tight channel. We do not have to get a bigger day, but the odds are we will. Because we're running out of time, it's more likely that we'll break above the high than it is that we'll get below the low. And the range right now is 4 points. It probably will get to be at least 5 or 6 points. And that means we'll probably go at least a couple points above where we are, or 4 points or 5 points below where we are. And it's more likely that we'll go 2 points up than it is 5 points down. So always in long, but probably only for a scalp from here. We have a little gap right here. It might lead to a measured move up. We've been sideways. This is the 8th day, and it's mostly sideways. It's been up in a fairly tight channel, and it's a wedge channel. And we have an important target above, and that is the measured move on the daily chart. I keep coming back to this. This test only dropped a couple ticks below that, and then we reversed up violently. So this is obviously a very important price. a higher low and a broad bull channel, very important. And therefore the two of them should create a third very important price. We're close enough to that price so that we may not get any closer. This test might be complete and we may come right back down to the breakout point, starting tomorrow. I still think the odds are we'll get to that point because this measured move projection is just so clear that you have to bet that we're going there. Weekly chart, way overbought. 48 weeks now without touching the moving average, the most in the history of the E-mini. And then the monthly chart as well. We have a 12-month bull microchannel, and that has only happened once in the past 50 years. And that microchannel was 13 months, and then we got a pullback of about 10%. So, yes, we get 13, 14, 15, 16, we get an infinite number of months, but it's not likely. The market usually regresses toward the mean. It usually begins to behave like it's behaved in the past. Sometimes it goes much further than it has done before, or much further than what is typical, and that's what's going on now. But the odds are we're going to revert back to the behavior that we've had in the past. We're far above the moving average, so we should get down to it. We can get to it by simply going sideways, but I doubt we're going to go much higher. And if we do accelerate up, it probably will be brief and result in a reversal. For stop entries today, really tough. We had a bear bar closing on its low for a low 2, but we had the bull bar opening reversal up, and then we have a second entry buy here, so double bottom, double top. The double top was a loser, and the double bottom was a loser as well. Not a great short below the II9, although it's a wedge. We got a few bear bars, but as it was falling, I was saying it's a terrible sell-off. Where are the consecutive big bear bars? And therefore, it's probably a bear leg in a trading range. Then we had a reversal up. You can call it a parabolic wedge. First leg, 2 bear bars, and then a doji. And then we have a bear bar and a doji, and then a bigger bear bar and a bull reversal bar. Possible low of the day, but more likely a minor reversal, which means if we rally, we'll probably test back down. And at that point, you have a chance at a major reversal. 2 good bull bars, 18, and we went up high, always in long. But I said that, yes, you could buy the close. However, the odds are the day is either a bull trend or a trading range day. We don't know which at this point. And if it's a trading range day, we could pull back very deeply to just down to the 16 high. As long as it stays above the 16 high, the argument is still valid that this rally led to either a bull trend or a trading range. And right now, it's led to a trading range. Very strong reversal down 25. Odds were we'd get at least a small second leg down, which we did. Not a good stop entry buy 26 or 30. And I thought about selling 40 because of the wedge, 1, 2, 3, and I ended up not. And then you could buy the reversal up. We have you can call it an II, a triangle, right? We have a micro double bottom. We're near the low of the day. So the location is good. And then we've worked up in a weak rally. We're only up a couple points, 2 or 3 points in the course of an hour. We're running out of time on the day. The odds still are that the day is going to get bigger. And because we've been going up and we're near the high, it's more likely that it's going to get bigger by going up than it is by going down. So chances are we're going to break above the high of the day. However, if we do, we'll probably only go a point or 2 above, because when you have a small day and the breakout occurs in the final hour, the breakout usually does not go more than a point or 2. We could get vacuumed up to the targets above the all-time high and then that measured move target above, but that measured move target above is almost 4 points above where we are, and I think the odds are against the market getting there today. So stop entries, not good. Buying above 1, above 4, selling below 3, selling below 9. Buying above 18 was probably okay, and then buying above 54 maybe, and selling below 39. I think those would be the only 3 that I would consider. And then buy the close, sell the close. I would not sell the closes here. I talked about that at the time. I said if you buy the close here, I thought it was okay, but you had to put a stop down here because it's a breakout, a reversal up from a bear trend, and it could be a bull trend, but it could also simply be a trading range and have a very deep pullback. So if you buy here or with a limit order here and you want to hold, your stop is down here, and then you scale in higher. This bull bar, I don't know, in general, I want to be scaling in 2 or more points below the first entry, and you barely get that down here. And then limit orders, I would not trade with limit orders here, even though it was a limit order market. I think you could buy the 22 low, but as I said, I thought there was a reasonable risk that we could have a trading range instead of a bull trend and a deep pullback. I think I bought 1 point down and I tried to buy 1 point lower, did not get filled, and I got out break even on my first entry. And then through here, we had a less than a 2 point range for 20 bars, so I do not trade that. And then here, if you want, you could buy below 61 or just buy at the market and take a chance that the momentum carries us to the new high. And daily chart, it's a wedge. Different ways to count it: 1, pullback 2, pullback 3, pullback 4. Maybe it's easier to see on the 60-minute chart. Different legs up: 1, pullback 2, pullback 3 or 3, pullback 4 or 5. The rally lacks consecutive big bull trend bars, and it's therefore more likely a bull leg in a trading range than a resumption of this bull trend, and that means it'll probably lead to a bear leg in the trading range and a test down to this low at some point in the next several days. Okay, I should stop here, and again, I'll be speaking about trading the open and futures IO at 1:30, and I'm assuming Richard will be able to put a copy of the webinar on the Brooks Trading Course site, and I'm hoping that the moderators of the Brooks Price Action site can put it up as well. Okay, so I hope everybody has a good day.